In March 2021, a family office you've never heard of shook the entire market. The warning signs were there: violent spikes, crowded trades, and leverage hiding in plain sight. And when the margin calls hit, retail investors didn't just lose, they became exit liquidity, while the biggest players rushed for the door. The whale was Archegos Capital Management, run by Bill Hwang. Not a hedge fund, a private firm. Less disclosure, less visibility. But behind the scenes, Archegos built gigantic positions using a tool most people never see: total return swaps. Here's the trick. With a swap, the bank buys the stock, but Archegos gets the gains and losses. So Hwang could control massive exposure with a fraction of the cash up front. Even more important, swaps helped mask how big the bets really were, because the positions were spread across multiple banks. Prosecutors said Archegos misled banks about its risk and holdings to keep borrowing power flowing. Archegos piled into a small set of names, creating concentrated, crowded exposure. When a huge buyer pushes the same stocks, prices can rise fast. Prosecutors argued this crossed into manipulation, supporting prices to protect the position and keep leverage alive. Then prices turned. Banks demanded more collateral, margin calls. Archegos couldn't meet them. So banks began dumping shares fast. The unwind was brutal. Wall Street banks lost more than $10 billion combined. Credit Suisse alone later described losses around $5.5 billion. In court, the government said this wasn't just a bad bet. They charged it as a fraud and market manipulation scheme. A jury convicted Bill Hwang in July 2024. He was later sentenced to 18 years, and CFO Patrick Halligan was later sentenced to 8 years. So what can you do, especially as a retail investor? 1. Fear unexplained price spikes. If a stock moves like a meme without a meme, look for leverage. 2. Watch for concentration risk, when a story depends on one giant buyer staying alive. 3. Respect forced selling. When margin calls begin, fundamentals don't matter in the short term. Liquidity does, because in a leverage unwind, the last buyers become the exit.